right, folks. Today is January the 27th, 2020. We're looking at the futures. The futures are down. So the futures are down because, well, the excuse that the markets use is because globally people are still panicking because of that coronavirus out of China. It's not quite contained yet, and it is spreading. So with that being the case, investors think that less people will be traveling. When less people travel, the price of oil has a lower demand. The price of oil is already twice as much as what it should be. And remember, it's been being propped up for the banks. So the price of oil has already been artificially propped up for a while. Demand is lower because people don't think as many people will be traveling in the future because that virus is not contained. So now the price of oil is dropping. So remember I said last week or the last couple of weeks, if the price of oil continues to drop, then stocks will drop as well. So let's see what we have. So far we have the Dow and the S&P 500 down 1.5%. We have the NASDAQ down almost 2%. And we have small caps down 1.25%. NASDAQ is down the most because NASDAQ has been shooting up the most so far this year. So the big mistake that I made on Friday was thinking that small caps would just bounce off of its 50-day moving average and then go up. So right now they're not quite at their 50-day moving average. With this 1.25% loss, it will put them at their 50-day moving average. And the S&P 500, the Dow, and the NASDAQ, they will be about at their 20-day moving average. So we're going to play it a little conservative today. For small caps, we're going to move that to a 50% SS Russell and then a 50% Putnam stable value. I know last week I said do 20% SS Russell, 20% Harbor Capital, and 60% Putnam stable value. This is one of the reasons why I do that, so you don't take a huge risk. I'm willing to take some of the risk because, that's just how I am. But for you guys, I'll try to get you to be conservative when I think there's a lot of risk involved. Let's look at some charts. Okay, we're looking at small caps. So that's one of the main indexes we track. You see the black line. The black line is the 50-day moving average, but it's like an exponential moving average, which is like more significant than a regular moving average. So my thoughts are, or my hopes are, if the graph or if the price comes down to that black line, the 50-day moving average, hopefully in the next day or so, it'll bounce back off of that 50-day moving average and continue to go up. If not, it'll move down to a 200-day moving average, which I got to try to find out where that's at. 1 second here. Okay. So if price continues to fall after today, it'll be headed towards the 157.5 price range. So right now it's at 165.39. We're hoping it gets down to about no further than 163 and then continues to go up. If it gets past 163 for more than 1 day, it's headed down to 157. And then after that, it should be a pretty big bounce from 157. But we don't want to take a chance on taking a beating that much. So thanks for watching. Like, share, comment, and subscribe. Let me know how you guys like these pre-market videos. Later.